So coming to the next definition, liability. What is meant by liability? So it is an obligation. It is an obligation to the entity created based on past events, and results in outflow of some economic resources in future from the entity. It results in outflow of economic resources in future from the entity. Is treated as what? Liability. So it is an obligation to the entity and created based on past event. What is meant by an obligation? Obligation stands for what? Duty. And remember, asset is a right. Asset is a right. And liability is an obligation. It is a duty to pay. It is a duty to pay by the entity to the third party. By the entity to the third party. For example, business purchase the goods on credit basis from Mr. Abhi for rupees 5 lakh. Business purchase the goods on credit basis from Mr. Abhi 5 lakh. On the date of purchase, business will promise to pay that amount within so and so period. So here, one obligation is created to the business which is liable to pay in future. Which is liable to pay in future to Mr. Abhi. So it is an obligation to the entity. Nothing but duty to pay is created to the entity. Because of what? Created based on some past event. Because of previously you purchased the goods from the respected party on credit basis. That's why you have that person name in our books of account as a creditor, as a supplier. So that account is created in our books of account because of one activity happened previously, and which results in what? Outflow of economic resources. So economic resources stands for what? You may pay in terms of cash. Sometimes you may give another asset to the party for settlement. And then the transfer of economic resources from the entity to the third party, to that person in future. In future. So it is said to be about asset. So after some period, you require to pay to that party. In that case, if you pay the amount in cash, then that is a one type of economic resources. Sometimes, if you are unable to pay the amount in cash, then you have to hand over any one of the asset you have. So it results in what? Some outflow of economic resources from the entity to the person in future. Okay, that is said to be about a liability. So it is an obligation to the entity. It is an obligation to the entity and created based on what? Past event, and results in outflow of economic benefits in future. Results in what? Outflow of economic benefits in future. Is said to be a what? Liability. Is said to be a what? Liability. The best example, creditor. Creditor stands for what? Nothing but what? Supply. And when we purchase the goods on credit basis, then that person name we used in our books of account is nothing but what? Creditor or supplier. And another one is bank loan. If you obtain any loan from the bank previously, On the date of taking the loan, one obligation is created to you to pay that amount in future. So you required to repay that amount to the entity in future, right? So that's why bank loan is covered under what? Liability. And so any, for example, sometimes the company is having a policy of paying the salaries. So at the on 5th of the next month, 5th of the next month. For example, January month salary is liable to pay on 5th February. February month salary is liable to pay on 5th March. March month salary is liable to pay on 5th April. But we are closing the books of accounts on 31st March of the every year. On 31st March, the benefits, the services we received from the employee relating to the March month, but relating to the March month salary will pay on 5th April. Means on 31st March, we received the services, but we didn't pay that amount to the respected party. And so that is said to be about outstanding. That type of outstanding expenses are also covered under what liability. And means we are getting the services, but we didn't pay the amount to that party, and nearby future we require to pay. Those are covered under what? That is also covered under what? Liable. Outstanding expenses. So everything. So which are having some obligation to pay certain amount in future, which was created based on some past event and results in outflow of some economic benefits to the entity, economic benefits from the entity in future is said to be about liability. Okay. And these liabilities These liabilities are classified into the two types. One is what? Current liability. Another one is what? Non-current liability. Current liability. Current liability stands for the liabilities which requires to pay or transfer the economic resources within 1 year from the date of balance sheet. The liability which requires to pay or transfer the economic resources within 1 year from the date of balance sheet are called as what? Liability. So means from the date of balance sheet from 31st March 2025 to within 1 year, 31st March 2020. Within that 1 year, anything is liable to pay are covered under what? Current liability. Example what? Creditors. And somehow bank overdrafts. Bank overdrafts are also required to pay within 40 days or 45 days, etc. So liable to pay within 1 year are covered under what? Current liability. And other than current liabilities means what? Which are required to pay or which are required to transfer that economic resources. So for a period more than 1 year, for a period more than 1 year from the date of balance sheet are covered under what? Non-current life. Simply said, other than current life, not required to pay within 1 year. Example, bank loans. The best example is what? Bank loans. Generally, we took the bank loan for a period more than 1 year. So that's why those are generally classified under what? Non-current liability. So liability stands for what? It is an obligation to the entity created based on the past event and results in outflow of some economic resources in future from the entity. are said to be about liability. So generally, liabilities are classified into the two types and based on the tenure of liable to pay. If the liability requires to pay or transfer the economic resources within 1 year from the date of balance sheet are covered under current liability, and which requires to pay or transfer the economic resources for a period more than 1 year are covered under what? Non-current liability. Non-current liability. Based on the tenure, we classify whether it is a current liability or a non-current liability. Okay, so we discussed what is meant by asset, and the second one is what is meant by liability. What is meant by liability, and another one. So it is also defined as it is treated as claim of the third party or the outsider over the total assets. Over the total asset. The claim of the third party or the outsider over the total assets. Over the total. And generally, for example, we have the assets, say non-current assets and current assets are there. And these non-current assets or current assets are liable to pay to the, and means these are used for settlement of the outside liabilities if any we have. So liability generally is nothing but what? The claim of the outsider over these assets. Generally, two parties are having the claim over the total assets of the entity. One is nothing but what? Owner, and another one is what? Third party or the outsider. Third party or outside. And owner is having the claim over these all assets. Outsider is also having the claim over these all assets. Owner outsider claim is treated as a liability. Outsider claim. And that means if you are unable to pay the amount to the outsider, then outsider is having a right to right to seize the respected asset, right to take over the respected asset, right? So and owner's claim over the asset is treated as a capital. Owner's claim over the asset is treated as what? Capital. So two parties are having the claim over these two. One is owner, another one is what? Outsider. Outsider's claim is technically defined as what? Liability. And owner's claim is technically defined as what? Capital. Okay. So it is treated as the claim of the third party or outsider over the assets. Over the assets. It is also treated as what? Liability. It is treated as what? Liability. Okay.